I call this, what's the date today? August 31st, 2021 virtual meeting of the Board of Finance to order. First off, I will move to approve the, Julianne, is this correct? The May 25th, 2021 Board of Finance meeting minutes. Do I have a second? Thank you, Commissioner Barboa. All in favor of approving the minutes from the last board meeting, raise your hand. And Madam Clerk, please call the roll.
Commissioner Barboa.
Aye.
Commissioner Benson.
Aye.
Commissioner O'Malley.
Aye.
Vice Chair Casada.
Aye.
Madam Chair Piscotti.
Aye.
So
So those minutes passed unanimously. Thank you. Next up, presentation. The Board of Finance report, August 31st, 2021. Madam Treasurer, take it away.
Madam Treasurer, you're on mute.
I'm on mute. I'll restart. Thank you, Madam Chair and Commissioners for the Board of Finance. My name is Nancy Burst and I'm the Bernalillo County Treasurer. This is the report for the quarter ending June 30th, 2021. And it'll be a wonderful one. So let's continue. The next is the agenda and the page numbers associated with the presentation. On this slide, this is the one we're anxiously awaiting for the year ending in collection for 2020 taxes. We did a fantastic job collecting over $734 million. And that is, next slide, 96, almost 97% collection rate for the year. And that's, I mean, we couldn't have asked for anything better, right? After being closed and then opened under COVID. I do want to point you to the 2019 tax collection rate. Remember, we had the special session in June of 2020 that extended the second half of 2019 taxes to May 2021. So you'll see there that the 2019 collection rate went up to 98.76, whereas last year, June 30th, we were at 96.8%. So just in that extension, we collected $14.7 million for 2019 taxes. So you can really see where legislatively that was a good thing that Santa Fe did for us and for our taxpayers to allow a longer amount of time to pay taxes and waiving penalty and interest for that time. Here's a snapshot of some of our property tax collections. In the top left, when you look at the call volume, you'll see that April is where we got slammed with calls this year in 2021. And I think everybody was just wondering, you know, are you still closed? Are you gonna open? How am I gonna pay? So there was just a lot of activity on the phones. And then May and June just settled right in with between 6,000 and 7,000 calls a month, which is sort of comparable to last year. But remember, last year was COVID and people were really calling to try and find out, how are we going to pay taxes? Your office is closed, all that kind of stuff. Right underneath that is the delinquent account turnover to the state. Those, when we say turnover, those are properties that are 3 years and older that we turn over to the state for collections. They do the collection piece. They still send us the property taxes, but of course they keep any penalty and interest on that money. And then the larger graph, the delinquent collections, you can see there that really in June of 2020, that's when we were really trying hard to collect delinquent taxes. We knew things were shut down in COVID, but not too badly that we still didn't try and make that effort to collect, compared to June of 2021, where we knew the economy had shut down, jobs were lost, businesses were closed. We just did not collect as much on delinquent accounts as we did the year before. Here's a new one, and it doesn't, at the beginning, it doesn't look new because it's still a pie chart on our property tax distribution. But this is one of the little tweaks I made in changing the distribution to categories. You now see 6 different categories in that pie chart that may be more meaningful to you and the taxpayer rather than listing the entities. So again, seeing how much of our tax money goes to education, how much goes to health, how much does go to the environment when we talk about AMAFCA, the flood control group, the Mid-Rio Grande Conservancy District, Edgewood Soil and Water Conservation District. So I think people want to see that kind of groupings. We still have the county and the city and villages there, as well as what goes to the state. And at this point, when we get to balance sheets, I usually turn it over to my deputy, Ken Scott. Thank you, Ken.
Thank you, Madam Treasurer, and thank you, Madam Chair and the Board of Finance. Just before I start, one quick clarification. I can't see hand raises, so just shout questions at me. Totally fine to do that in this particular case, so that I can certainly answer any questions you may have. As I always say, this is one of the more important slides that I go over because it directly talks to that safety principle, if you will, that we have when we're looking at safety, liquidity, and yield. And so the other thing to remember too about this slide, as I always mention, it's a snapshot in time. So it's as of June 30th at that particular time. And so with that in mind, you'll see that the Wells Fargo collateral was a lot more than what was required. And the reason why is because, again, at that time, they probably had more collateral pledged to Bernalillo County than what our current balance is. Just to remind you, usually that has to be at least 50% per state statutes. As far as the other accounts, the Bank of the West and the main bank, of course, as always, those are our ICS accounts. So those have the full FDIC insurance covering those balances. So that's why that 61 million in Bank of the West and the 5 million in main bank are fully insured. And then, of course, lastly, we have the other 2 accounts, the Wells Fargo housing nonprofit that has to be capitalized a little higher, so we have to break those out. Same thing with San Miguel. And then finally, we have our Bank of America repurchase agreements that we hold for debt defeasance, and those are also collateralized a little bit higher than the standard amount. So since I can't see anyone, I'm going to pause real quick. Any questions before I move on to the next slide? Hearing none, moving on. Oh yes, let's talk economics. Love economics. So one thing I think is sort of a high level, we're doing really well as a national scene and even locally in New Mexico. Of course, there are still some trouble areas that we have to be cognizant of and still monitor. But for the most part, the economy is humming right along. Real GDP growth was at a healthy 6.5%. And yes, it wasn't as high as the expectation. They expected 8.4, but 6.5 is nothing to be ashamed about. I think a lot of people would take 6.5 any day of the week. Unemployment is improving. It's down to 6 million jobs lost. Just as a point of order, 9.4 was at the high point of the pandemic. So we still have some ways to go. But again, we're blowing out the water, 2008 and the previous crisis. So I'm happy with those numbers. And then of course the consumer index. And just to explain that a little bit, it's the University of Michigan Consumer Index, and basically it's a survey of essentially consumer sentiment. That a 5.5 score is actually 10% higher than the same period last year, which is absolutely phenomenal. And then as far as New Mexico, I don't know if you remember, but I believe it was Commissioner Quesada who wanted some more New Mexico news. And we're trending in a positive direction there as well. The consensus is typically that we're going to have a slow but consistent recovery. And that's why you see that the growth is expected to be modest at 1% this year and then jump to almost 3% next year. Just again, that's sort of a slow ramp up. But even New Mexico is doing well when you compare it to the 2019 employment numbers. We're still down about 55,000 jobs. But unlike last time, we have a lot of positive things that are coming our way. For example, Amazon, right? Amazon is still hiring like gangbusters. So hopefully it'll mean that we'll have a much better economy here soon. And certainly I think it's a positive trend. Some of the risks, as I mentioned last time, obviously was inflation. I will say I'm happy that it seems like I'm wrong, and I'm glad to be wrong in this. The inflation numbers that recently came out were actually right in line with what they expected and suggest that it might indeed be transitory. Lord knows, I hope that's the case. And then the other risk, of course, is the Delta variant. And in my view, I think it's not just COVID itself, but also how New Mexicans respond to the Delta variant that I think will be really indicative of what happens with our economy. As we all know, New Mexicans are very, very resilient. So I'm optimistic that we'll get over this, but of course that is still a concern.
Ken, what is the inflation at right now?
So I think in the last reading, it was 0.4% higher than what they were expecting. And I think it's 4.2% year overall, which again is, a lot higher than I certainly thought, but is certainly trending with what economists are expecting. And again, if you can remember from the last meeting, economists by and large believe it's going to be transitory, and it does seem to bear that out as of right now. Good question.
Thank you.
Any other questions before I move on? I can't see anyone. I do want to have one real quick point of order too. So I get a lot of this data from UNM, Bureau of Business and Economic Research, which is sourced at the bottom. And they just had a bit of bad news. Their longtime director, Dr. Jeff Mitchell, passed due to cancer a few weeks ago. So please, everyone keep them in your prayers. Jeff was an absolutely amazing man and a brilliant economist. Obviously we're going to miss him, but please keep his family and the staff at UNM in your prayers. A little emotional. Yeah. So okay, going back to the buckets, this hasn't changed. Probably a little bit of a broken record, but of course this is our 3-bucket strategy. The first two is sort of the liquidity component, and it's 15% of the operating fund portfolio in the general budget, 50% of the general budget, and it must mature within 30 days. And then of course we also have a ladder where 60 million must mature within the first year. And then of course there's the core portfolio that is actively managed by public trust. So I'm going to start off with the high liquid sort of update here. And there's not really a whole lot to see, but one thing I do want to point out that is different from the last time you saw these numbers is the ARPA funds at 65 million, a little under 66 million. Obviously, I'm sure you guys are aware of that, but we did receive that in May, I believe. And, it's sitting there waiting for, for more direction on how that money will be utilized. I will say that we always look at how we can make a little bit extra money if we can on ARPA. As of right now, it doesn't look like there's much opportunity. Just so that you know, we get 3.5 basis points, which 100 basis points is 1%. So that's 0.035%. But that's actually some of the best rates around, especially when you look at the short term of the curve. I think Ash looked last week, and I think the best we saw was like 4 basis points. So essentially what we're doing now. So it's just not really conducive for us to make any kind of trades. But that money is there, and obviously we're trying to grow it as much as we can in a safe manner.
And I'll jump in too, Ken, if you don't mind. It's right above that, we're still posting the CARES money, because again, remember, this is June 30th.
Right.
So we hadn't spent down all of that money.
Right.
We know you're here in the next meeting, in your commission meeting, about CARES and how we have spent that down. Today, as of today, we don't have that CARES money. But again, this is the snapshot in time as of quarter end, year end, June 30th. That's what we had. Not a lot, $133,000, but we just wanted you to see that.
Before I pass it on to Ash, any questions?
Just explain to me par amount versus market value. I mean, they're the same.
Okay. Yes, very good question.
You get that.
Yeah. So the par value, and it really is probably more indicative if you look at the liquid bucket with public trust advisors. But basically, it's the actual value of the securities, the par amount, but the market value is what it's currently at. Well, as of June 30th, that value. So when you look at, like, for example, a lot of our accounts, I mean, we're not investing anything long term, so that's why you don't see like a difference between the par amount and that market value. But you will absolutely see that when you look at some of the securities that we purchase. Good question.
Thank you.
Anything else? Ash, I think this is you.
Well, thank you. Good afternoon, Madam Chair and the Board of Finance. My name is Ash Mehta. I work with Public Trust Advisors. We manage 2 of your 3 budgets or buckets, as well as the bond proceeds portfolio. A lot of you guys have seen this before, and not a lot has changed since the last meeting, but I'll go through this fairly quickly, and please stop me if there's any questions. We're going to start off with the liquidity ladder. Again, that's the bucket that requires $60 million maturing monthly. Right now, as of August 9th, when we generated this statement, we have maturities out to September 15th of 2023, which means the ladder goes out 25 months. So we do have quite a bit of liquidity available. That, Ken, if you want to go to the next slide, we can show a little bit about the balance of the account. If you look on the top right-hand side, we'll see the balance currently is $137 million. And over the last quarter, the income generated from that portfolio was about $221,000 that went back into that bucket. So again, as Ken was talking about, there is a very, very low interest rate. If you look at the market yield of the portfolio on the left-hand side of the slide, we're looking at about 13 basis points. And that's the market yield, the actual yield with the adjusted price up. When you were talking about the market yield versus, or sorry, the par value versus. So basically what happens is when the value of the assets go up, the yield of that goes down. So that's what's called the book yield rather than the market yield. So you'll see the market yield is 13% based on what we paid for it. But because the price appreciation has gone up, the book yield shows the lower value where the appreciation is built into the value. So you'll see if you look at net unrealized gain loss, you'll see $165,000 worth of gain. That's the appreciation of the assets because of the change in interest rates. We can talk about that further offline if we want, but that's just kind of the basic explanation of that. Ken, you want to go to the next slide?
Yep.
Okay, so for our operating bucket, this is a longer term 0 to 5 year benchmark that we invest money out for the county. I don't know if you remember, but in May, we were able to move $30 million from the highly liquid bucket over to the core portfolio, which allowed us to invest the money out a little bit longer. If you look on the next slide, I don't believe it's reflected there. Oh, it is. Okay, so we have the 331. It was 112 million. And as of June 30th, based on that transfer in May, the value of the account was 142 million. Now that has reached its cap. We cannot add any more money to that until there is a resolution from the board. But that portfolio over the last quarter earned $309,000. Again, at very low interest rates, but that's kind of the market we have to deal with right now. Are there any questions before we proceed here? Okay, and Ken, if we're going to talk about the bond proceeds, okay, so we can talk about the portfolio performance. The last month, we were able to return about 7 basis points. Not fantastic, but that's basically what's going on in the market right now. Hopefully we'll see yields start to trickle up in the longer term. We are starting to see longer term rates steepen upwards, which means, you know, with the fact that Ken was talking a little bit about inflation, as inflation worries can, you know, increase, the Fed has to start raising interest rates to abate those fears. And the last kind of Fed report says next year, third quarter, they're expecting raise in rates. So right now we are looking at the next year of rates staying flat as they appear right now. Next slide, Ken. And so the bond proceeds portfolio, this is a matched portfolio. What that means is when there are expenditures coming up, we will have investments mature right before those expenditures to maximize the amount of income we can generate from those investments. But that also keeps it fairly short term. Next slide. And so this account was 27 million back at the end of March. There was a bond issuance, I believe, in May. And so those funds were added to the portfolio. So now the current value of that portfolio is 47 million. Again, this is shorter term dollars. This is matched maturities. So the earnings for that were only about $11,000 for the last quarter. You know, this money comes in and it goes out fairly quickly, but we're trying to maximize any earnings we can with that portfolio. So that's what this portfolio actually is there for. And yeah, I think that's it for us. Hopefully we'll have some more news for you guys next quarter. There are some strategy changes possibly coming up. I'm sorry, Madam Treasurer, is there something that?
No,
Oh,
you're
okay.
fine.
Okay.
I was jumping ahead.
Okay.
Sorry.
No problem. Ken, is there anything else that you need from me on this side, or are we moving on?
I think we're good.
Okay. Thank you.
Yes. Now, this is, of course, my favorite slide. And even though I have something new to report this time, it is still my favorite slide. I want to say that. So one thing that you will notice if you look at this slide is that it's showing for the fourth quarter a loss of 34,000. I need to explain what's going on there so that you understand. Essentially, that's because of our amortization schedule for our bonds. We've been buying a lot of bonds at a premium, so that means we're paying more than what it's actually worth, so that we can realize a higher coupon payment. And because of that, we have to sort of book that value, and we always do it in the fourth quarter. So as a result, it makes it look like we had a loss since we're booking the value, since we paid extra for those premium bonds. Just to give you an idea, for example, of how it's changed over the last 3 years, in fiscal year 2019, which I think was my first full year at the county, if I'm not mistaken, we bought 82,000 worth of premium bonds. So that's what we had to sort of book in that year, in that fourth quarter. By comparison, this year, we bought 1.3 million bonds. So we still made money, we still made investment income. I think the amount that we made was about 1.2 million, a little under 1.2 million actually, in investment income, but it's not reflected that because of accounting. Essentially, we have to book the values, that higher value that we paid, those premiums that we paid for those bonds in the fourth quarter. So again, we're still doing well, but it might not necessarily reflect that. One thing that we're thinking about is possibly changing how we present it so that you could see the amortization as we go along throughout the quarter. Because if you look at some of the other slides, for example, you see it, like for example here, if you look at the income summary, right? So you're seeing that amortization there, but we might start breaking it out by quarter. Does that make sense? I want to make sure I'm explaining that well. I know I didn't get a chance to talk to everyone, but I want to make sure I'm explaining that well.
And just looking at that bottom total line tells you that for the year, we still made $4 million. So we did well in this environment.
It's still my favorite slide, but it's just, I didn't.
Ken's not giving it up.
I'm not. Any questions though, before we move on? Okay. Well, if there are any questions, by all means, reach out to me. I'm happy to discuss. The next slide, Madam Treasurer.
The next slide is our other office news. Some of it I've already touched upon, the collection update, and again, talking about the delay in 2019 taxes, which is, we were able to collect that $14.7 million. The other thing that's come up this time is that we do know the Moriarty Edgewood School District is going out for a bond on the November ballot. So that was confirmed. They got all their paperwork in. So this is part of that House Bill 407 from 2019, the Local Elections Act. And this is absolutely the last year that we will be off cycle for having local elections. And Moriarty Edgewood School District, we do have parcels in that school district. It's actually a school district that exists in 3 counties, Torrance, Santa Fe, and our county. All 3 of us will be going out for delayed tax bills, and we have requested from Tax and Rev Property Tax Division a 1-month delay so that we will mail out our bills by December 1st, and your first due date is December 10th, and your second and final due date before becoming delinquent will be January 10th of 2022. So I do want to let you know that. We have not received the approval yet for that delay. The request has only been submitted, but I don't expect them to not accept it. The other bullet item, the annual internal audit, of course, we had no finding, I shouldn't say of course, but we're awfully proud that again, we had no findings there. That was sent to the county audit committee and then sent to you at the last August meeting, and it was approved by you all. So you probably saw that in there and what's coming up in the next internal audit 2-year cycle. So we'll be included in that. I also wanted to give you an update on the New Mexico Mortgage Finance Authority, their mortgage assistance program. They did stop because it was a pilot of $5 million, and that $5 million was spent. And so they're on hold right now. They are expecting to receive $50 million in November, and again for the entire state. And I'm hoping that we'll be able to get a breakout of how much was given out in our county versus other places, so that we can see what the real need was in Bernalillo County. The tax lightning case updates, great news there. We are done with it. And just to let you know that in May, we had 16 parcels of property that was unsuspended, and that money went out to the entities. That was $60,000, almost $61,000. And then in August, we finished up. Kind of between May and August, we had delinquent accounts, and of course we had moving into our new building here. So it was kind of put on pause. But in this month, we got out 11 parcels to release $91,000. So that was a total of 27,000 parcels and $151,000 that was unsuspended, and that went out to the other taxing entities for distribution. So that's put to bed as well. The last thing is the new report format. You saw the pie chart earlier, and that was something different. But then also we attached this time an appendix for you to look at. And in that appendix, we have our key performance metrics in there. And when you open it up, you'll see those treasurer's office metrics. Those are metrics that are on our transparency portal. So you might get some constituent calls on that. You might be looking at it as well to see what those metrics are. I will tell you that, it just wasn't a great year. And I think everybody really realizes that when we had COVID and things were really shut down for longer than we ever thought would. So we only hit 3 of our 10 metrics, but I think all of that is really understandable. The 3 that are there is we did increase our online property tax payments. Of course, when the office is closed and the building's closed, you can't collect any other way except by mail, drop box, and online. So we were glad that we had that online capability. The other one was increasing our social media presence. Of course, you just have to switch what kind of channel you're communicating to your taxpayers. And social media, we just went gangbusters. I think there were several months in a row where, not to be too bold about it, but we got more hits than any other department or office. And we just really appreciate all that feedback we get from customers, from taxpayers. They make all kinds of comments. They want to know more. And we're always engaging with those and just loving it. If we're not going to be open, we can at least use social media. Ken?
Yeah, I just want to shout out Julia Levis. I think a lot of you guys know who she is, but she does an amazing job managing all of our social. And you, of course, being the star of a lot of this stuff that she posted. I think that was a really big benefit to the county, and was another channel that we got our information out. So thank you, and thanks to Julia.
Yeah, wonderful. The last metric that we met was having a clean internal audit. So that was fantastic. The other thing that's in your appendix is the monthly scheduled maintenance report that we get every month. It's a 2-pager. The first one is the 10-year county tax roll. So you'll see for all those tax years what we've collected and how our collection rates are going. And when you look at them, you're amazed when you see 99% of taxes being collected. So we're a very efficient office. And there are cumulative numbers on that report. So we want you to know about that. And that's basically how we knew we collected the $14 million from 2019 to this year. So that's a great one. The second page of it is really a breakdown of your taxing entities, of what we share with them. By law, they have their mill levy amounts and that we send to them every month from our previous collections. So when you look at that pie chart, you can then turn to this page and go, well, how much did the city of, or the village of Tejadas get? How much did they receive? So you can really dig down deeper if you'd like. So that's our report.
Treasurer Pierce.
Yes, ma'am.
This is Commissioner Barbo. I wanted to follow up and ask about the Mortgage Assistance Authority. I know when we talked, you shared more about it, but I'm trying to remember, and I guess I just want to be aware of what's coming in the. Yeah, you need some water.
Yeah, I drank all my water. Thank you. I did reach out to them a little bit more because we really wanted to talk about engaging them more in having better communication plans, really. I know for myself, and I've shared this with you before, that I saw all the commercials and the ads for rental assistance, but I didn't see a single ad for the mortgage assistance. And what bothered me about that was knowing that New Mexico has a higher than national average of home ownership. So if we're running above the nation in owning homes, but we're not communicating about this mortgage assistance program, we're not doing our constituents any favors. So reached out to United South Broadway Corporation. They're a premier foreclosure group, and just really said, how can we partner better? And how can we approach the Mortgage Finance Authority to really be a partner in getting that program out and that information? I will say that the MFA director there came from Property Tax Division. So, I pitched the idea of saying, look, I'm chair of the Treasurers Affiliate with New Mexico counties. We can get this out to all 33 counties in one swoop. And that's by giving it to us, giving it to United South Broadway, and we can run with it. So sometimes, you just got to have all the right stakeholders and the community people there. And so we're making that offer to them, and we'll see how they respond. So far, it's been very positive. So thank you. Any other questions? I'm sorry for getting that dry throat. I apologize.
Could somebody put us back on the full grid so we can see everybody? Thank you so much.
Oh, there we all are.
Right.
Madam Chair,
So, Commissioner Barbeau, do you have another question?
I just wanted to appreciate Treasurer Burse and Ken and Ash, and just both for meeting with me ahead of time so I could fully understand this, and just for working so hard. Like 96, 98% is huge. I thought for sure COVID was going to mean a big dip, and y'all did the thing. And so thank you. And just thanks for your work and appreciation.
Thank you, Madam Chair and Commissioner. We appreciate that. I'll pass that on to staff.
Okay, so seeing no other questions, we have a couple of voting items. So in reference to the quarterly investment strategy, I move to give advice and consent to the proposed quarterly investment strategy as outlined in the Board of Finance report. Do I have a second? I saw Commissioner Barbeau's hand first. So all in favor of approving, please raise your hand. And Madam Clerk, please call the roll. Linda Stover, can you unmute yourself?
Sorry, I've got dogs here, so I'm trying to play devil's advocate. Commissioner Barboa,
Aye.
Commissioner Benson,
Aye.
Commissioner O'Malley,
Aye.
Vice Chair Casada,
Aye.
Madam Chair Piscotti.
Aye.
So called.
So that, thank you, that passes unanimously. And stay there, stay right there, Madam Clerk. We've got another vote coming up. So in regards to the investment policy review and approval of changes, I move to approve proposed revisions of the Bernalillo County investment policy. Do I have a second? Commissioner Casada, thank you. So all in favor? Raise your hand and call the roll.
Commissioner Barboa,
Aye.
Commissioner Benson,
Aye.
Commissioner O'Malley. I'm sure she's
Aye.
there. There you go. Vice Chair Casada,
Aye.
Madam Chair Piscotti.
Aye.
Thank
So
you.
that passes unanimously. And so that brings us to the announcement of the next Board of Finance meeting, which will be Tuesday, November 9th, 2021. Board of Finance meeting at 4 p.m. by Zoom. And if there is no other business, this meeting is adjourned.
Thank you.